Another week, another day of managing our options portfolio to collect that sweet weekly income. This week has been a roller coaster week. We start off with the SPY gapping up very strongly and having experienced a strong bullish day on Monday. Subsequently, for the rest of the week, it's followed by somewhat of a respectable correction, and then today it seems like what we have here is somewhat of a rebound. So following the roller coaster ride that has been going on in SPY, my options value has been experiencing a very wild ride as well. For today, 16th of October, we will be looking at these options over here. Some of them will be expiring and some of them will need some attention. I'm very excited to go through Apple as well as AppV, the stock that I have been using for the dividend capture strategy this week. Alright, so let's first go through Apple. Last week I have sold a 118 strike call for Apple, and I still remember being curious about why this week's option volatility is so wide. And that is because Apple will be releasing its new iPhone products, and that is something that I wasn't aware about. So following the event, prices for Apple has been quite volatile indeed. It shot up, correct back down, and then it is hovering around this area for the moment. And what's surprising is that having sold the 118 strike call for a price of $1.92, right now Apple is trading at 119.85, almost close to 120, and yet the value of the call option that I've sold have not changed at all. So what this means is that I've broken even with this sold call currently, and what I've gained is a $1.80 of upside value in my underlying position, and that will be the Apple leap call expiring 20 Jan 2023. Right, and if we look at it, I have initially purchased this for a price of almost $26, and right now it is going for $29.65. So far, my leap calendar Apple trade has been going so smoothly, and it seems like there is no downside to this at all. But in actual fact, it is not true, alright? So today I'll be going through the downsides of this trade. If we take into account the previous premiums that we have collected in the past 2 or 3 weeks, $21.02 is the cost of my trade right now. In other words, my purchase price for the Leap Apple call expiring 2 to 3 years away is only at $21. And if we take all the premiums and profits that we have collected so far, this will be the downside for the trade. The break-even price for this entire trade will be at $105 and $140 for Apple. What it means is that if Apple drops below 105, or if Apple shoots up above 140, I will break even for this entire trade. And that means all my previous collected premium will be lost back, and I will still be net break even. So that is the risk of the trade, and I feel that this risk is a rather reasonable one to take on, because if we go back to the chart, where is 105 and 140? 105 is somewhere at the 100 SMA, slightly above it, somewhere around here. And 140 is way up above. So it will take Apple to break through all-time high and then go up a little bit more before I'll reach my break even. So the upside is not something that I'll be so concerned with, but the downside is the more dangerous one, I feel. Alright, so I hope this explanation will make it clearer for those of you who are interested to take on this strategy for yourself as well. Now, Apple is having earnings on the 29th of October. Let's look at our options for the trade. 23 October, next week's expiration, is still within the earnings period, so we are fine with that. And let's go ahead and roll our position over. So in fact, right now it's only going for 170 to 182. And remember, we sold it for 190 plus, right? So let's just buy it back. And then let's go on to next week's expiration. We can go for a strike of 121 or 120. And we'll still be collecting some premium after rolling. Alright, so if we go back to the charts, 120 to 121 is still near the high of today's and yesterday's candle. So with the current price action, it looks like there might be a chance for Apple to come back down to retest these moving averages again. If we take that stance, then we should sell more aggressively at 120 strike to collect more premium. But if we believe that Apple has the upside to continue going up, then perhaps selling the 121 strike would be safer. Alright, so currently I'm still going to be slightly bullish on Apple, and with that I'll be more generous with it, and I'll sell the 121 strike, and we'll just collect 33 cents of credit for this trade. Alright, so let's confirm and send and wait for it to get filled. Alright, and it's in. Alright, next up we have two Bank of America options. One of them is a 25 strike call, one of them is a 25 strike cash secured put. And the price of Bank of America right now is going at 24.30. So it's highly likely that the call is going to expire worthless. And meanwhile, the cash secured put will require some action. Alright, so let's do things step by step. Let's go through the covered call first. Alright, looking at the calls for Bank of America, 25 strike currently is only going for 14 to 15 cents. So it's no longer that attractive anymore. If we recall from, I think 2 to 3 weeks ago, weekly premium for the 25 strike is going for about 20 cents. And that was what made my decision to sell weekly covered call instead. But right now, let's assume 15 cents and then we divide by 25 strike. That will give us only 0.6% per week. Multiply by 4, just nice hit our criteria of 2% premium per month. Right, and if we go further out, let's say on the 13th of November, 25 strike is going for 62 to 64 cents, just slightly more than if we were to sell weekly. That's because volatility is much higher during this week, and I guess that's probably because of election is around the corner. And since our underlying shares is at a purchase price of 24.55, I'll just go ahead and sell the 13th November 25 strike call for BAC. And let's do a quick calculation for this. Let's say we take the midpoint, that will give us a premium of 2.5%. So not that big of a deal, but let's go for it either way. All right, and send it out. Next is our 25 cash secured put that is currently in the money. So it is going for 69 to 72 cents. We are still in the profit slightly because our trade price is at 81 cents. So we have made a total of about 10 over cents from the sale of this put. Now let's look at our options. I want to buy back and then I want to sell another one that is 1 month out. So 13th of November again. In fact, we can roll to the 24 strike and still collect a slight premium of about 4 cents. But I'm going to be slightly greedy here and I'll just sell the 24.5. For this, we'll collect net of 31 cents credit. So let's go ahead with this. All right, and then let's review how many Bank of America we have right now. There's 2 put over here, 3, 4, and 5. Right, and then 6 because we'll be rolling this one. And I'm very tempted to sell another one at 24 strike. Right, so we will go ahead with that. And then I'm going to enter it at the highest price possible, which is the ask price, and then wait for it to get filled. If it gets filled, we are in. All right, so let's check on our rolling of the Bank of America. So currently, market is going for 31.5 cents. So let's go for 32 then. All right, we'll give you some time and come back to it if it's still not filled. All right, and next is EP, the dividend capture strategy. I've entered the stock this Monday at a price of 88.4 for 100 shares. So you can see the record over here. And on the same day itself, I've sold one call contract for EP at a price of 88.5 strike. For this call, I have received a premium of 45 cents for selling it. This is the call option that we are seeing. 88.5 call, 45 cents. The current value of this call is close to zero. It is going to expire worthless soon. And if we take the premium collected from this call and subtract it from our share price, essentially we have a purchase price of $87.95. This is the price chart of AppV. We can see that after my purchase and after giving out of the dividends, $1.18, which is quite a huge amount considering the share price of AppV itself, we have a sharp gap down of prices immediately the next day. This is due to the payout of the dividends. And then because of the overall bad market sentiment, it has continued to correct down further. Only today, it has rised up a bit, and this gives us a chance to get some premium for selling the call for next week. Alright, so if you are doing this strategy yourself, there's a few ways you can consider to exit. Since the call is going to expire worthless, you can let it expire worthless, and then take into account the profit collected from the sold call, take into account the dividend amount that you have collected, and then from these two sources of profit, use it to subtract the purchase price of the share. If your purchase price falls below the current price, that means that you are still at a profit overall after taking into consideration the dividend yield and the premium collected from the call. If the purchase price is still higher than the current price, that means you're still at a loss from this entire trade. So this is one way you can do. Another way is to continue to sell covered calls until it reach back your purchase price. And that is to say, we will ignore the dividend collected as a source of profit. And that is what I'm going to do. So this is a more aggressive and greedy way of doing things. So if you take into account of the sold call, my purchase price of the stock is effectively $87.95. And this allows us to sell the 88 strike call to get out of the trade much easier if stock prices were to rally from here. And the 88 strike call, it is currently going for 37 cents to 41 cents, expiring next Friday. For AbbVie, earnings is coming out on the 30th before market open. So essentially that makes this the last week that we have to sell call options on it. And if it still does not get into the money by next Friday, then I will have to exit the trade manually, unless I want to carry this stock over earnings period. All right, so with that, let's go ahead and sell this. And I'm just going to have a sell limit of 40 cents, just 1 cent lower from the ask price. All right, it's filled. You can see it over here, 88 call. And for this, I'll close it out later when I'm about to end my day. And lastly, we have Yum China, 50 strike cash secured put. I've sold it for $1.50. So Yum China right now is trading at 53.56. And this call is very likely going to expire worthless. So I'll just leave it to be. And if it really drops to $50 and I get a sign, then I'll be more than happy to take out these shares. All right, and I'll not be selling another put for Yum China because we have already done so last week. The Yum China 20 November, 52.5. And right now I've collected about 40 cents worth of premium if prices stay put till the expiry date itself. Okay, so let's check on our running trades and let's get them all filled before ending the session. All right, rolling of the BAC cash secured put is going for 305 cents. So let's just go for 31 cents and hope it gets filled. This is BAC, another cash secured put that we are initiating. I'll just leave it to be. And then lastly, we have the covered call. It's still not going. Let's go below the market for a quick fill. All right, and there you have it. For our covered call, let's do the same as well. In fact, let's take a look at the option chain itself. It's going for 60 to 61 cents. What about the weekly one? Weekly one is still the same. In fact, at this point, there is no difference in selling the weekly or the monthly one anymore, other than the commission cost. Right? If we sell weekly, we will incur more commission charges because of the number of trades that we have to take each week. All right, it's filled. All right, so that's all for today. We have 3 options that will be expiring worthless. And for next week, what we have will be the Apple Leap Calendar call. This one we have to manage every week, so it's going to become quite standard from here on. BAC, we will have 2 cash secured put coming up at a strike of $24. So let's hope that these 2 expire worthless, such that our position size in BAC gets cut down. And then we have AbbVie and FXI at 41.5 put, which is likely going to expire worthless as well. All right, so let's just pay a little bit of attention to our covered calls for EEM and FXI, these 3 over here. Let's look at their delta and see how they are doing. For EEM is currently going for $45.60. So we have both of the calls slightly in the money. 45.5, we can leave it for now. Not much action will be needed. And for the 45 strike, it is deeper in the money. But if we look at our trade prices, we sold these for 159. And right now it is only going for 136. Despite being more in the money, we are still actually profiting from the sale of this call. And that is likely because I've sold this at a higher volatility, and right now volatility has fallen. That's why the value of the options decreases along with volatility. All right, so lastly with FXI, for this 3.5 call, FXI is going for 44.145. So 50 cents into the money. But somehow it seems like we are losing quite a lot from this trade. So let's just take a look at FXI. FXI 6 November call. All right, the delta is currently 0.61, so not much action will be needed. If the stock price rise by another dollar, or in other words, this option fall into the money by another dollar, then perhaps we will have to roll this option out and up. All right, so this is the price chart for FXI. Currently, it has been making lower highs, so this is somewhat of a resistance, right? We have a support at 43, so it's currently quite far from the moving averages. So let's hope it will slowly take its time to correct back down and rise back up and not get into the money by the time 6 November comes. Alright, so that's all for today. Hope you have taken away some valuable insights and ideas on how to operate and manage your own options portfolio. All it takes is this short little time every day of the week, and you'll be able to collect weekly income for yourself. If you like what you're seeing here, please show your support by smashing the like and subscribe button. You are welcome to join the Telegram community group to have a more in-depth discussion regarding trades and investment ideas with the community members. Thank you so much for watching. I'll see you in the next video.